Hello, everybody. I wanted to take a minute and welcome everybody to our first ever mortgage and real estate live with the experts question and answer session here at Georgia United Credit Union. Again, thank you for joining us here today. Thank you for taking time out of your day to sit in with us and hopefully learn a little bit about the current real estate market that we're in. Hopefully, we can help answer some of your questions. You might be first-time buyers. You might be looking to buy your third, fourth house, whatever that may be. Hopefully, we can help guide you through the market as it is today and then answer some questions that you have. My name is Andy Edge. I am the mortgage sales manager here at Georgia United Credit Union. I'm here to answer any of the lending questions or loan questions you may have. I also have a good friend of mine, a longtime friend of mine, Amy McBriar, who is a real estate agent with Pathfinder Realty. And Amy's been in the business a long time too. I'll let her tell you a little bit about herself, and then I'll tell you a little bit about myself, and then we'll hopefully start answering some of your questions.
Good afternoon. I'm Amy McBriar. I'm a local realtor with Pathfinder Realty. Like Andy said, I've been selling for almost 18 years and never left Coweta County. Been there my whole life. I'm married to a local firefighter and I have 3 children. So thank you for joining in with us today.
And as I said earlier, my name is Andy Edge. I've got over 17 years experience in the mortgage world. Pretty much always been on the sales and origination side of the business. And so, again, as we said, we just appreciate you joining us here, and hopefully you'll learn some good information from us. So with that being said, I'll turn it over to our moderator, who's going to start just kind of asking some questions that everybody has submitted, possibly when they registered for the class. And then also we have our text line available as well if you have some live questions that you'd want answered. Please know that we will try to answer as many questions as we possibly can. If we run out of time, we will respond to your questions after the Q&A session is over, but we definitely want to answer as many questions as we can. So here we go. Let's get started.
Okay, your first question. We have heard the real estate market is very competitive right now. How is it different than what it has been like in recent years? And is that good or bad for buyers?
I would say right now the biggest issue for a lot of our counties is the lack of inventory. So you've got different price brackets, but in those price brackets, you've got it broken down to where you only have a few houses. So it's constant competition. So you have to make sure that you're coming in with your highest and best strong offer. It be financing, cash, be it whatever highest and best that you can do.
Yeah, and that goes hand in hand a lot with the lending side of things. We're seeing people try to get pre-qualified, which we'll touch on a little bit later too. But just potentially looking to make the highest and best offer that they can, so they're trying to get qualified for as much as they can, so
Sure.
that hopefully they can land on it. With inventory being low, it is a very competitive market that we're seeing right now too.
Absolutely.
Okay. With prices increasing across the board, should I wait to buy a home right now?
I would say the answer to that question would be no, just because the biggest advantage right now is that the interest rates are so low. They're lower than really we've ever seen across the board in a consistent basis. So right now, I wouldn't wait to buy a house.
Yeah, I would definitely agree. From the lending side of things, we know right now, as Amy said, interest rates are extremely low. So you can buy a whole lot more of a house right now with as low a possible payment as possible. So even as the prices continue to increase,
Mm-hmm.
you're still going to have the best possible opportunity that you can. And again, having been several years in this together, we've seen it. Again, currently right now, rates as being as low as they are, it's definitely a good opportunity.
Absolutely.
Okay, I hear about houses selling for more than list price. Is that still happening?
Yes. And the thing is it goes back to the being so competitive in the market. People come in and say, okay, I'm going to pay more than list price, be it five, $10,000, $15,000 over list price, and they're bringing their own cash. But at the same time, if you have a good, strong conventional loan, then you can compete with that, and you don't have to bring this absurd amount of cash to the closing and still be competitive.
Yeah, there's a couple hurdles that you would possibly run into on the loan side of that transaction, though. From the lending standpoint, the loans typically have to lend off whichever is less, the appraised value or the sale price. And so almost every property on every loan that we do, we have to have an appraisal. And the appraisal would hopefully appraise for what the sale price is. But in these offers over and above list price, a lot of times we're running into that issue to where, again, a lot of times if we base it off the lesser appraised value, then you might have to bring more than just your down payment to closing. You might have to bring down payment plus closing costs plus, yeah, whatever that amount is over the value to make that seller whole. Which in your experience, let me ask you this. I mean, how is that pretty? It's every deal right now? Is that not every deal, or where's it coming
It
in?
depends on how many offers are on the table, and a lot of times you can find out from the listing agent how many offers there are. But I'm seeing a lot of times people are putting in, these agents are putting in what's called an escalation clause that states, okay, in the event the house doesn't appraise, I'll pay up to, say, $5,000 more than what the contract price is. But then it still goes back to the appraisal. There's still a gap there. And so you just kind of have to work around that gap, plus the financing contingency would still be in place.
Gotcha.
How has COVID affected the real estate market?
I'll say it really hasn't affected my production, really. I can say in the beginning, of course, nobody left their house for a month, just like all of us. But once people got back to work and people got back to living, it hasn't slowed down. I mean, I can say that I'm busier now. Probably the past 18 months, I've been busier than I was the year prior, production wise, just because people are moving. People are coming here from all different states, and people are adjusting their lives and where their work is and family. You've got a lot of mixed families living together now, parents, grandparents, kids. So it's just whatever works.
Have you seen a lot of out-of-state buyers? I know you mentioned people coming, but is there like a particular area they're trying to get out of and come to?
Yes, I mean, I would say probably 30% of my buyers this year alone have been out of state.
Um, yeah, sir. And so, could you repeat the question one more time, please?
Sure. It was how has COVID affected the real estate market?
It's from the lending side of things. It's changed a little bit of how intrusive we may have to be with some of the qualifying, meaning that a lot of people may or may not have lost jobs. And with the loss of jobs, a lot of times we have to re-verify employment. You have to be on your job for a certain amount of time, often depending on the job and how you're paid to qualify. And then kind of like what asked Amy that question about where they're coming from is, again, a lot of people now have realized that they can live anywhere and work out of their home. So
Mhm.
it's making sure that all those boxes from the loan aspect are checked with employment and income.
Sure.
It's also impacted credit a lot for the people that did lose jobs or have struggles during the pandemic. It may have affected credit. And while the COVID pandemic is a very valid reason as to why, it still doesn't mean that that you always get a pass for that very reason from a credit standpoint.
Exactly.
So
Briefly describe what to expect and the process of making an offer on a home.
First off, I would say that, of course, before you start seeing a house or go out with your agent to get them to show you a house, you want to make sure that you're pre-qualified. And that's where somewhere like Andy would come in to make sure you're not just running their credit score, but you're looking a little bit deeper. Because, sometimes there's things that come up 2 weeks before closing that you don't even know about. But yeah, you just want to make sure that you're pre-qualified, that you've got, enough saved or on hand for your earnest money and your home inspection and your appraisal. Because those are three things that people don't think about when they first make an offer. So you've got some out of pocket expenses there that you need to be prepared for before making an offer.
Okay. Realtors are asking me to get pre-qualified before they will even show me a house. What is that process like?
sure. So as Amy mentioned, the main reason that realtors are pushing buyers to get pre-qualified is so that, number one, they're not wasting their own time looking for a home that they can't afford or can't get into, and at the same time not, I don't want to say wasting Amy's time, but the seller has an issue that they want to try to sell this house and make sure that everybody involved is in good standing. With the pre-qualification, basically we start looking at multiple pieces of your story. It's your income, it's your assets, it's your credit, it's potentially what kind of property you're looking at. And one thing I will say at Georgia United, one of the reasons I love this entity that I do work for is we actually look at the context of what you're trying to buy as well. So we look at all of those items individually, but then as a total package, we have to make sure that your income can cover your debts plus the new house.
Mhm.
Your assets, if you have to have a down payment, you have enough. Again, credit scores, there are some minimums that are out there with credit scores and things like that.
Absolutely.
Okay. I have some money saved up for a down payment. So should I use it all for the house, just some, or what is the minimum down payment required?
From the loan aspect side of things, more times than not, you will have to have some form of a down payment that can go from anywhere from 3% to 5%, depending on your scenario. Um, Again, we look at the big picture aspect of a borrower to say how much are you required to put down, or also if you have a certain monthly payment that you're trying to get to, how much would be required to put down to get to that scenario. I will throw our plug in here saying that we do have a really good first time buyer program. That's not only a first time buyer program, but we can potentially do 100% financing for you here on a program at Georgia United. So that way that would keep more money in your pocket. Um, Amy, I'll let you answer this too, but I'm a big fan of not using all of your assets
Mhm.
when you go into a purchase of a home.
Yeah.
As Amy mentioned, you'll have things along the line as you're buying the home that you'll need to use your money for. But at the same time, after you buy that home successfully, you'll have other things that you need to purchase as well. Could be furniture, could be appliances, little things like that that you would need extra savings for.
Well, and a lot of times right now, sellers aren't paying buyers' closing costs because they don't have to, because of the amount of offers that they're getting on the houses a lot of times. And so not only do you have your down payment that you have to think of, but you've got your closing costs and your escrow startups, which is your taxes and insurance to get that first few months going into your escrow account. Then, of course, you've got your earnest money, which in return does act like a credit at closing, but you've got other things involved in there, and you got to plan for what could happen. So you don't want to put all your eggs in one basket.
I have a quick question for you too. As we said, with appraisals possibly coming in less than sale price, how willing are sellers to renegotiate these days?
Um, I mean, it's kind of like if they see, a lot of times if sellers see, okay, everybody's working together, that it's not just the seller that takes a hit and it's not just the buyers that takes a hit. One thing about me that's helped me be successful is I give back. Just because in the event if something does happen, I want to be able to help with an appraisal if I can. And then you get the other agent involved. Hopefully they'll be willing to help and the buyer and the seller. So it's kind of a group effort making it come together versus just one person's taking the whole hit.
All right, well, we had a question come in via text, so I'll go ahead and ask that real quick. How hard is it to sell your house in the current market and to try and buy a new house at the same time?
I mean, I would say, you want to make sure that your house is ready to go, that it's marketable. You've got your ducks in a row to be able to pack up and move in 30 days, 30, 45 days. And then you're also what I call it as a piggyback is you're piggybacking on turning around, right around and buying your new house. A lot of times it can be done. We do it all the time. It's just you've got to make sure that you have your ducks lined up and in a row. And sometimes there could be a gap where you may have to stay somewhere a day or two and put your stuff in storage and then move it back out. It's just you've got to make sure that the puzzle pieces are together and that you have your ducks in a row to be able to do it. But we do it all the time.
And there's always things called contingencies in contracts as well, to where I think what this member's asking about is when it goes to the contingencies, how many offers are you seeing sellers accept with somebody having a home to sell as a contingency in that contract?
I mean, a lot of times, for example, I just put one under contract last week that it does have a contingency, but the buyers that are buying their house has already put up their non-refundable earnest money and their house is under contract and it's a short close. So, in that aspect, you got to kind of look at the whole contract and not just that it is a contingency. There are some variables that go in there.
Sure. And timing is always a big question because from a loan standpoint, we can typically close loans in about 30 days. But again, in this weird market that we're in, things like appraisals are taking longer than they usually do.
Mhm.
Attorneys are busy, so the title exams that we do on all these properties can take
Sure.
longer as well. So,
Okay. Are there specific minimums involved with buying a home? For example, a down payment, credit score, etc.
sure. And we touched on this a little bit earlier too, to where the minimum down payment that's required for a loan is typically somewhere around 3%. It can be as low as 5%, but that also goes into what we talked about earlier with having a big picture look at this, to where some people may need more than that minimum down payment just to qualify for a certain house. Um, We do, again, as I mentioned, have a 100% program for well-qualified borrowers. So it could be potentially where you don't have to have a down payment. We mentioned credit scores. The minimum credit score that we at Georgia United will allow on a loan is 620. It's not a blanket. If you have a 620 or better, we will give you a loan. As I said, there's multiple factors that go into the loan process over and above that. But again, I would say minimum down payment look for is between 3 and 5%. Credit score 620.
Okay. How much will I have to pay a realtor to help me buy a home? And does this present a problem with the loan? And if so, what can happen?
Well, typically the seller is the person that is typically responsible for paying the commission. So unless you are, for example, buying a for sale by owner or buying a house directly from somebody that there's not a commission, so to speak, involved, then sometimes the buyer would have to pay the commission. But I've rarely ever, seen that. But typically in the listing contract, the agreement between the realtor and the sellers is that the seller is responsible for the commission.
Yeah, and where it could potentially be a hurdle as far as, having a realtor or not having a realtor. First off, I'll back up and say that we always suggest on the lending side to have your own realtor as a buyer. There are a bunch of hurdles, which I'm sure Amy could tell you some horror stories from people that try to go about it on their own. But the number one selling point that we tell people is, as a buyer, typically you don't have to pay them a dime to help you buy your home. And that's one big hurdle that's always jumped by that. But at the same time, it is a legally binding contract. So your realtor is there to help you navigate those waters. So I would always suggest having your own realtor going into purchasing a home.
And to also comment on that is, a lot of times I'll have the seller contact me and say, okay, Amy, these buyers want to buy my house. What would you charge me to do it? And there's kind of also a flat fee in there that you can do, because it's not just writing the contract, it's getting the contract to the attorney, it's setting up the home inspection and all the other inspections that go along with it. It's communicating with the appraiser and making sure the title gets done and all the moving parts get turned into the attorney and the lender so we can close. So a lot of times it does work out that way, and it's kind of like on an appraisal. Everybody works together to make it work.
Yeah, and again, we've been down this road numerous times together. It's if there's something not in a contract that comes up in a loan application, be it, again, could be an appraisal, it could be something with the product, that person might lose any money that they've already invested in the transaction if they don't have somebody behind them.
You need some
for their
protection
side.
there.
Okay. Why are homes going under contract so quickly these days? And why does it seem like they're so much more expensive?
Well, I mean, it's just lack of inventory. Our county in Coweta County is 485 square miles, and as of yesterday, there was 217 houses on the market. The lack of inventory, builders can't build houses fast enough, and then you've got the whole other element of cost of building supplies are so expensive. It's not just the windows or the framing packages now, it's the framers have gone up, electrical, plumbing, everything's gone up. So that has increased new construction prices, which in return that trickles down, to resale. If a seller can capitalize on a builder's market, that's one reason why the prices have gone up.
Yeah, and that's also still one thing lingering from the COVID issue as well, is being able to get your hands on supplies, be it, I know lumber was scarce and expensive for a while,
Windows.
electricals, windows, paint even now I think is a scarce item that's
Mhm.
hard to find. And so that demand pushes the cost for everything involved.
Yep.
And at the same time, like we talked about earlier, with interest rates being as low as they are, it's just increasing that demand that people that are going to buy a house, it just furthers our argument that I think it is a good time to buy a house.
Absolutely.
Okay. Based on a home inspection, can I back out of a contract? And if so, what about any money already used on the home, for example, like earnest money?
Yes, so I'll answer that question. So yeah, you always want to have a home inspection. In the event there's something that comes up on the home inspection that's detrimental or that you can't get past, typically what you have in a contract is called a due diligence period. That typically can run 7 to 10 to 14 days, just depending on how soon you can get your home inspector out of there. One scary thing that I am seeing right now is buyers and agents are advising their buyers to waive the opportunity to their due diligence period and their home inspections. Where me, personally, I have a clause that I put in the contract In the event the buyer does choose to do that against what I'm telling them, you just have to make sure that you've protected yourself. But if you have a due diligence period and the home inspection, something comes up on it, and you're still within that time, you can terminate and get your earnest money back. Now, your inspection cost, of course, you wouldn't get that back, but your earnest money you would.
What's an inspection cost these days?
Between $450 to $500, and in my opinion, it's worth it.
Yeah, I would agree. We also, kind of like when we always tell people that they need to have an agent represent them on the buyer side, we always recommend an inspection. You said it's $450 to $500. That can potentially save you thousands of dollars, not only just your earnest money, but there's no refund policy when you buy a home. If you don't know something and you own that home after you buy it, it's on you to get it fixed if something's wrong and you don't know about it going into it. So,
Absolutely.
What are all the different loan programs out there, and how do I know which is the best option for me?
great question. We hear questions all the time, and we talk to members that come in, and basically they have an idea of what kind of loan they're looking for. But oftentimes that may not necessarily be the best fit for them. We at Georgia United Credit Union, we offer typically what's mainly called your conventional loans. It's your standard, typically a fixed rate loan, 30-year loans, 15-year loans, 20-year loans, the pretty basic type loan programs that are out there. And part of the reason that we do really not only use those programs but push them a lot is because it is the standard loan program that's been out there forever. Your parents, your grandparents usually end up getting the conventional loans. That being said, there are other loans types that we don't even do here at Georgia United Credit Union. Things like FHA loans, which are government-backed loans. They just offer a little bit more credit leniency at times. We do offer VA loans, which is a veteran-based loan. There's also other loan programs that are out there that are location-based, things
Right.
like what's called a USDA loan. USDA loan, you have to have a rural property, but there's also limitations to a lot of those. For example, the VA loans, you have to be a veteran, you have to be eligible. The USDA loans,
Income limits.
there's income limitations as well, meaning you have to make enough money to qualify for a loan, but you can't make too much money for the area that you live in.
Right.
So my suggestion with borrowers and members when they come in and have an idea, what I always tell them is have a budget in mind. Have an idea of how much money you're comfortable spending every month,
Payment-wise.
payment-wise. Have a comfortable idea as to how much you're willing to use as down payment and things like that. And then let the loan officer do their part and guide you into the program that might suit you best. And then what we do is try to provide options. We might not just steer you into one particular thing. We just try to give you as many options as you can.
Sure.
And then whatever you determine fits your situation best is what we'd like to try to help you get your home with.
Right. Well, and two, also, it's kind of like, say they go into it thinking, oh, I want to do a VA product, because you've got that 100% sometimes option in there with a VA, but then you could also maybe move into your 100% financing option. Or if they're saying, okay, I want a VA loan, but I am putting 20% down, you could roll over to a conventional product.
Yeah, absolutely. And things like that to where, an interest rate isn't always your best barometer
Sure.
of what loan fits you best. And we've done that exact thing where somebody says, well, I'm a veteran, I want to use a VA loan. Well, it's more expensive. The rate's higher potentially than
Right.
a 100% loan. And it's not as strenuous on the property itself. So
Well, and that's a good thing too of having a good lender like you is you'll come and sit down with my clients and go through all the moving parts and all their documentation to see what program best fits them instead of just saying, okay, we're going with this because this is what you want.
sure.
Okay, this question actually touches on the inspection again, but we'll go ahead and ask us it's a two-part. So does a home have to have an appraisal and an inspection? And is it a good idea to get one done if not required?
A home, if you are paying, well, regardless, a home doesn't technically require a home inspection. That's a personal opinion, but it's kind of like, going and buying a car without driving it or seeing it first. You're just going to go write a check sight unseen. So you want to make sure that you dive into all the moving parts of a house with a home inspection. You've got a roof, you've got HVAC, hot water heater. If it's on a crawl space, you want to make sure that the crawl space isn't, full of water. If it's an older house, you want to make sure that the electrical has been updated. So there's a lot of moving parts to a home inspection. Now, if you're getting a loan, 9 times out of 10, yes, you will have an appraisal. If you're paying cash for a house, an appraisal isn't required. If your agent can require or supply good comps showing that the house is more than worth or worth what you're asking for it or willing to buy, then you don't have to have an appraisal.
Yeah, and on the loan side, we typically do not require an inspection.
Mm-mm.
Again, we always recommend it, but it's not necessarily required. From an appraisal standpoint, I would say 97, 98% of the time we do require an appraisal. And that goes back to the conversation earlier where we typically lend based on the lesser of the two, the
Sure.
value or the sale price. And so the other thing too is just from a member service standpoint, if we're doing a loan for you, we want you to know that your house is worth what you're paying for it.
Mhm.
It's just making sure that your investment, because that's what this is, it's a
Sure.
huge investment, that we want to make sure it's sound advice and that you're going into it knowing exactly what you know. Now, if the appraisal comes back less than the sale price and you are completely comfortable in doing that and you can qualify
Sure.
for your loan with a lower value than what you're selling it for or buying it for, then again, that's personal preference. But again, typically inspection is not required for our side of the world. The appraisal usually is.
Yeah.
Is there a way to roll the closing costs into the loan when buying a home?
There are occasionally loans that are out there to where you can potentially do that. We briefly touched on a USDA loan or a rural development loan. There are times that if the value of the property based on an appraisal comes in more than the loan amount, then yes, you
Yeah.
might have the opportunity to roll the costs into that loan.
Mhm.
Those are few and far between options. Um, Really, it comes down to more of a strategy, and I know Amy will talk to her buyers on this too, to where if that person just doesn't have a lot of assets or they want to have those costs covered, usually the seller has to agree to that and they work it into the sale price. So for example, if somebody's willing to spend $100,000 on a home and the seller is willing to agree to sell that property for $100,000, they would also probably be willing and agreeable to sell it for $103,000 and pay $3,000 toward their closing costs.
So the net equates the same to the seller. The seller's not out
Ex-
anymore. You're just bumping the sales price up enough if you've got enough equity there based on the comps
Correct.
to compensate for that. But we do, I mean, we do that.
Sure. And then again, that unfortunately does bring back the question of the appraisal because the house does have to appraise or at least sale price to make that
Mhm.
work too. So
Absolutely.
again, a lot of variables go into that, but not typically a way to just roll it into your loan amount.
Mhm.
What should I look for in a realtor and a lender to help me find my new home?
Why don't you take the realtor question first?
I would say, somebody that you can trust, somebody that has your back, because right now it is a cutthroat business, and you want to make sure that your agent is a seasoned agent and knows all the possible moving parts of a contract, because there's a lot that goes into it. It's just like it's not just your home inspection that you need to be concerned about. You want to make sure that in your contract it's covered that the septic system has been pumped if you're on a septic within the past 10 years, and to make sure that it's in adequate working condition, because the last thing you want to do when you move into a house is, oh, the first day you got to replace all the drain field lines. You want to make sure that that it is clear of termites, that you don't have any active termites, because if it is, a lot of times if you have a termite letter and it's active, that has to be treated before you can close on a house, because that's a condition for the loan. I know some loans don't require termite letters, some do still now. But you just want to make sure that you're protected on your side.
Yeah, and just to add to that too, and I've always suggested that if you're going to work with a realtor, which hopefully you will when buying a home, you want to have somebody local. You want to have somebody
Mhm.
with some local knowledge of the market, the area, the properties. And the reason I say that too is because again, in this crazy market that we're in, you might want to go see a home at 7 o'clock on a Sunday,
Right.
and you have to have somebody local to your area. Hopefully, that can help you again wade through those waters. Um, from a local lender perspective or how to choose a good lender, um, again, I would still say try to stay local if at all possible. With the internet-based lending that's out there these days, I know that's a real popular place, especially to start, so that you can
Mhm.
get an idea of what you're looking for.
Sure.
But at the end of the day, you also want somebody that's going to answer a phone. If you're a
Absolutely.
first-time buyer or a third-time buyer, you're going to have questions. Things can
Mhm.
change. Not all loans are the same. Not the process should be very similar, but you as a buyer, you're an individual or a family, and so you're going to have a lot of questions. Have that person that's going to answer a phone or answer an email. Um, Again, I suggest locally. Us being based all over the state, we have people that have 6 or 7 other loan officers that help cover the rest of the state. So
Well, and two, the other thing about, I think, one thing that's gotten forgotten about real estate is it's relationship based. And with the fast pace of how everything moves so quickly and so fast now, that relationship in some senses has been taken out of it. Now, me personally, I value my relationship, say with Andy, because I can text him on a Saturday night at 7 o'clock, no matter what he's doing, and say, hey, this person's calling you, be on the lookout, or will you send me an updated pre-qual? You know, you've got to make sure that you've got a good working move-in relationship with those people like that you can trust, because you know that they have your buyer's back.
Yeah. And as we talked about, so many people are moving here from out of state, and with the internet being what it is, I know you've gone and previewed houses for people and
Yes.
said, yes, this is something that you're going to like, and they have to have that trust in you
Right.
that you're putting them into a good property
Sure.
as well.
And
So,
in a safe location,
right.
and that the house isn't falling apart. So there's, you know, the trust factor is a big deal.
How long does the home buying process take from start to finish?
I'll let you start with that one from the offer standpoint.
So I would say, you know, typically once you go under contract, it's 30 days, 30, 45 days. You know, if you're doing a VA loan, it can sometimes take longer, but it's typically, you know, 30 to 45 days. But sometimes you have to write multiple offers before you know, get to that point.
Yeah, I would say in this market again, most people are basing everything on that 30 to 40 day type
Sure.
turnaround frame. From the loan aspect, is as again, if you're talking to Amy or if you call us as the lender first, we'll get you pre-qualified. But we've seen it. We're working with a couple of different people now that it's several months.
Well, like
into
right
the
now,
status.
for example, the Deans, we're on contract number 6,
Yeah.
offer number 6. And, you know, you just got to keep plugging at it and not get discouraged. But it can sometimes take longer.
Yeah, and the pre-qualification itself is typically good for approximately 90 to 100 days. If need be, we can always go back and update some information, and that way you're always on the ready. But excuse me, that's what we always recommend is have all your ducks in a row. You know,
Sure.
talk to Amy and say, hey, here are my boxes I have to check, so that you can make that decision quickly and
Right.
that the process can move quickly if you've got all your financial items in a row. So,
Absolutely.
Okay, we have another question that came in, not specific to home purchasing, but more on the renovation and refinance side.
okay.
So someone wants to know, should they go with a home equity line of credit, also known as a HELOC, or a cash out refinance? What's the best option?
Great question. And it really oftentimes comes down to personal preference and then how you're going to go about that process. I think Amy and I have actually talked about this personally before, to where if you are a person that is going to try to do some of the work yourself and you're hopeful of a budget, but you're maybe not a general contractor and know everything about what you're going to do. And
Right.
as we've seen, unfortunately, in this market, you can have a piece of plywood cost $10 on Monday and it costs $25 on Friday. So there's a lot of variables and factors that go into that question.
Sure.
And it really comes down to how comfortable are you projecting what your total costs are going to be. Other questions that go into that are what the market is doing. So what are interest rates right now on fixed rate loans? What are interest rates on home equity loans? Because home equity lines of credit are a variable interest rate. So you may know what the rate is today. It may be different from that 2 months from now or 6 months from now.
Or 5 years.
Or 5 years. That's true. We've seen it as where it is right now for a long time. Um, and then it also plays an effect of what are interest rates doing on the fixed rate option as well. If you're a safer side of the road kind of person that wants to know exactly what their rate and payment is going to be for a fixed amount of time,
Right.
then you can look at the cash out
secondary.
refinance option, to where you know exactly you have X amount of money to spend. When we give you that money in your hand, you know what your payment is every month. And if you spend it all, great. If you don't, you can put it in a savings account. But I would say the con to that option is you're given a defined amount of money.
Right.
And so if you use all that money and you get halfway through your project,
And you need more.
and you need more, we have different discussions at that point. We could have a problem, or we could come back and have to go through the process again,
Right.
possibly. So multiple options for buyers in that situation.
Okay, we kind of touched on this earlier, so maybe this person came in a little later, but honestly speaking, how hard is it to find a home right now?
Well, you know, if you're in that starter home price point, it is hard because you are competing with so many different people, because a lot of, you know, you've got a lot of consumers that are on what you would call a fixed income, be it a teacher, a nurse, a firefighter, a police officer, any kind of civic duty jobs, you're on a fixed income. And so if you're looking for a piece of property, 300,000 and less, it's tough because just the amount of affordable housing, that doesn't mean that it's low-end housing. It's truly affordable housing. It's just not out there. But if you've got two good paying jobs or one working paying job that you can, afford a nice mortgage, then sure, they're out there. But sometimes it just goes back to the inventory. We're just low on inventory, and it's not just in Atlanta and the surrounding counties. It's all over. I know the state of Georgia, for example, it's tough right now.
Yeah, and I just piggybacking on that, I think it's just price point in general is what's
Mm-hmm.
really blowing the first time buyer market is now pushing what, $250,000 potentially, depending on where you're
Yeah,
located. Whereas again, several years ago, that starting point was $130,000.
right.
And so it's like you said, the young people starting out really have to.
It's tough.
It's tough, and there's an incentive to save there. But yeah, that's kind of sort of why we're asking a lot of the questions about the market as it is right now. So
Okay, we had another question come in. What is PMI and is it necessary?
great question. PMI is also known as private mortgage insurance. Private mortgage insurance, I'll say this, you have multiple things that go into your monthly house payment. You
Mhm.
have your loan payback, which is your principal and your interest over the lifetime that you have your property.
Right.
You have property taxes, which every property you ever going to buy is going to have taxes associated with your county or your city or wherever
Mhm.
you're located. And then you have homeowners insurance, which if you have a loan, or it's always a good idea to have homeowners insurance.
Sure.
Homeowners insurance is there to protect you against the catastrophes,
Right.
storms, fires, floods, what have you. Those are there to hopefully replace your property
Mhm.
if something drastic happens. Private mortgage insurance, or PMI, is another part that might go into your total monthly payment because you're not putting at least 20% down based on the sale price of the home. If you are not putting down 20%, you're typically going to run into this PMI or private mortgage insurance because that insurance is actually there to protect the lender. It protects us at the credit union, being that if something came up and you unfortunately couldn't make your payments and we had to ultimately foreclose or take the property back, we would receive a little bit of an insurance premium from that PMI company to help make us whole. Now, that's the cons that are associated with it, is it increases your total monthly payment.
Right.
The pros that are associated with it are it allows you to get into a house so much quicker than trying to save 20% based
Right.
on the sale price. So as we've said, the expensiveness of a home these days, 20% of a $300,000 house is $60,000.
Right.
It's a very significant down payment that you'd be required to make, especially as a first time or even a second home buyer.
Mhm.
So PMI will allow you to get into a home with as little as maybe 3% down,
Mhm.
5% down. Yes,
Sure.
it will affect your total monthly payment, but it'll allow you to be a homeowner a whole lot sooner than trying to save up that money oftentimes.
Right.
Okay. With house values being as high as they are now, what is a jumbo loan and how does it differ than a regular loan?
Jumbo loans, we love discussing jumbo loans for no other reason than a jumbo loan is basically in excess of what they consider the conventional loan limit or conforming loan limit these days. Nowadays in Metro Atlanta, I think that's in excess of $540,000. There's a
Mhm.
specific number there that I'll throw back out in the feed. But basically, what that means is you're borrowing more than $540,000 on your loan to buy the property.
Right.
Um, with Georgia United Credit Union, there are very few differences between a jumbo loan and a conforming loan.
Mhm.
And what I say by that is many lenders will have additional qualifications that they require. Maybe you have to have more money in your savings account. Maybe you have to have a higher down payment.
Sure.
Oftentimes, maybe your interest rate is higher on a jumbo loan. We at Georgia United Credit Union have very few add-ons or what they call overlays for our jumbo loans. And I'm sorry, that loan amount again was $548,250 in Metro Atlanta. So again,
Mm.
as prices have increased, so have those loan limits
Sure.
that you can go up to with a
Which is
jumbo
good.
loan. Yeah, and it goes in hand with that. If you're looking for a large house, you're going to have to probably borrow a lot of money to do
Unless you've
so.
got the down payment to put down.
Absolutely.
Now back to that PMI question on your
Sure.
100% loan. that you have? Is PMI required on that loan as well?
Great question. So again, we do have our 100% program for well-qualified buyers. And yes, there is PMI associated with that loan, but you do not see it on a monthly paid basis. What I mean by that is if you have our 100% program, a 700 or better credit score, and your total outgoing cash flow from a monthly basis is 43% of your gross total income, so
Right.
before taxes, or less, then you might be qualified for this 100% program. You don't see that on a monthly PMI payment base because we increase your interest rate slightly
To compensate for
to
it.
compensate for the difference. But when I say slightly, it is a very slight difference, whereas that might be 1/4% added to your interest rate
Sure.
that ends up being a less felt payment associated with it, and you get to keep your money in your pocket. So low down payment.
Yeah.
Okay. Are there, so under what scenarios can I back out of a sales contract?
I mean, there's a few different scenarios. Of course, if you have a due diligence period in there, then you can back out during that due diligence period.
Can you back out for any reason under that due diligence?
I mean, there's a line that says all parties agree, buyers backing out per the due diligence period. And so many words, that's not exactly what that says, but you check that box and that's why. Now you can also terminate because you can't say you have an appraisal contingency and the house isn't appraised and there's such a big gap that nobody can agree upon, then yes, then you can terminate because of the appraisal contingency. And then you also have a financing contingency. I mean, stuff happens all the time. You lose your job and it's unforeseen. Well, you can't buy a house if you lose your job. So you've got different variables in a typical conventional loan contract. You've got your due diligence period, your financing contingency, and your appraisal contingency. That kind of all three of those variables do protect your earnest money.
Yeah, and those all go back to a lot of the pre-qualification stuff that we talk about too. Whereas if you submit your application to a lender, we review it, we're going to go ahead and ask to look at all your financial stuff too to make sure that, again, barring anything completely unforeseen,
Sure.
that hopefully everything will work out from the loan standpoint.
And
too.
it's not just going on like not a local, but a generic website and having your credit score run and say, okay, here's my generated pre-qual letter. You want a lender that can dive into it a little bit deeper. And that's something that you need to do too prior to starting the process is make sure you're good. Spend a few weeks working on it. Make sure there's nothing that you need to pay off or that you need to tweak on your credit score because you never know what could show up.
Yeah, absolutely.
Okay, another home buying question. What should I look out for in older homes? What are the pros and cons of an older home?
Now, I personally love an older home, but I like going in and completely rehabbing them. But you want to make sure that in an older home that the electrical has been updated. At least the panel. You don't want the old.
You want fuses?
No, you don't need fuses. And then, of course, typically most of your panels now are grounded at the panel, so everything doesn't have to be grounded at the outlet or the wall. You want to make sure, that the roof is in good shape and what's underneath your roof is in good shape, and that it's more so structurally sound because anything within the house you can always, tweak, update, go from there. It's more the structure, the roof side of things.
The only thing I can think of on the loan side to be cautious about is, again, obviously with the inspection and what they tell you, but also homeowners insurance
Yes.
on older homes can be a good bit more expensive
Mm-hmm.
because what a good homeowners insurance policy will do is give you back the value of what it would cost to rebuild your entire home on today's dollars based on
Replacement
what it was.
value.
Yeah, replacement value, because it's going to be really hard to find 60-year-old pine floors right now to replace it. And
Yeah.
so hopefully a good insurance policy would replace that if something drastic happened, but that might mean it's going to be a little bit more expensive as well.
Sure.
Can you explain the difference between a pre-qualification and a pre-approval?
Another great question. We get requests all the time for both. A pre-qualification is the typical standard of what real estate agents and buyers want to see. What that means is that you've submitted an application to a lender, and we have reviewed that application. We have looked at your income. You might have given us pay stubs and financial documentation, and we reviewed that. We've reviewed your credit report, and we've had discussions on anything that we might see, from bank account information to assets, making sure you can afford it.
Sure.
But that's typically the end of the pre-qualification. We reviewed your application and your documents on the front end,
It looks good.
that it does look good and that everything is, that you're in a good position to move forward. The biggest difference becomes a pre-approval when one of our underwriters has actually reviewed all that same information and given you the good news that you can proceed. The difference in the two is a pre-approval typically takes a little bit longer, and it is I'll back up a little bit. An underwriter is the person who actually approves these loans when they come through. Your loan officer does a very good job of reviewing everything up front.
Sure.
The underwriter is the one that just digs a little deeper and asks all the final questions and gives the final stamp of approval. So if you as a realtor is wanting a pre-approval letter, or maybe you have a seller that is wanting a pre-approval letter, we can accommodate that. It's just going to take a little bit more than 24 to 48 hours. It's probably going to take closer to a week to completely cross the T's and dot the I's and make sure that everything is pre-approved at that point.
And that's one good thing of, when you decide, okay, I'm going to buy a house, or I'm looking to sell my house and buy a house, you want to take that time to do your homework and that pre-approval. I mean, for me, if I receive an offer on a house, I would much rather see a pre-approval than just a pre-qual, because you've dived into all of their information and
Sure.
you pretty much just have to wait on the appraisal to come in to finalize it all.
Yeah, and we do a good number of pre-approvals at this point, especially on new construction, because right now with builders and sellers having so many offers, and we're able to do those pre-approvals to show them that, hey, not only am I in good standing, I'm in
Right.
great standing, that once
Exactly.
this house is done, again, barring anything drastically happening, that we're ready to go and ready to
Right.
close. So
Why should we use a credit union instead of a bank or a mortgage broker?
love this question too. In my 17 plus years of origination, I've worked at pretty much all of the above. And I can tell you, having been here for over 4 years now, it's not only a great place to work, but it is a great place to borrow money from a home. Amy is also a member. I've helped her multiple times here at the credit union as well, so hopefully she speaks highly of that. But again, we have multiple reasons. We are service oriented is the number one reason. We are those people that will answer phones and answer emails as often as we possibly can. We're local. We know the market. We know what we're looking for. All of our credit decisions are actually made here in-house in Georgia, in our Duluth main office. All of our underwriters are here. So if we have a scenario that we need to talk through and explain some things, it's not just a black and white box.
Right. Shuffling paper.
Absolutely, and we're not just a number. You're a
Mhm.
member, and you own us as a company, so we're here to serve you.
Right.
Another big reason is what's called intangible taxes. In the state of Georgia, if you borrow money to purchase a home from a bank or a mortgage company, you're going to pay intangibles taxes, which is $3 per thousand that you borrow on a loan.
Right.
Because we're a state-funded, not-for-profit entity, you are automatically exempt from that intangibles tax. So again, as we've said, with prices increasing on a $300,000 house,
Right.
$3 per thousand is an automatic $900 that you're exempt from paying.
And your closing costs.
Yeah, absolutely, and that comes right off of your bottom line as a buyer as to how much you have to bring to closing.
Mm-hmm.
So there's multiple reasons that I could go on for a long time about why I love working here and working for members
Sure.
at the credit union, but those are three of the higher points. Sure.
Okay. Question on home buying. How much more should you offer over the asking price if you really like a home?
It just kind of depends on, you want to also be realistic. You don't want to offer, of course, $50,000 more for a house if it's only worth what you're willing to spend on it. But at the same time, sometimes you can bump it up to $5, $7, $8, $10,000. But you also need an agent that's going to guide you on the right amount, because you've got to still be realistic on what you're purchasing and how much you're financing.
Definitely. And the only thing I would add to that too is going back to your loan officer, making sure that you can get qualified or approved for that amount as well.
Yeah.
Because if you only have a certain amount that you can,
And you're already pushing the envelope.
absolutely, because that means a lot of times that we have to validate that you're going to have the money where it's coming from, and there's limitations on that as well. So
Or if you're having to bring that much more in cash to the table on top of your down payment and your closing costs. So you want to make sure that you're making a good decision
because
there.
in that same breath, as we talked about with the appraisal, if you're already above that asking price
Mm-hmm.
and your appraisal comes in low, you might have just increased that number a good bit more as well. So
Yep.
Is there a set period of time I'm required to be on my job before obtaining a loan?
not necessarily a defined timeline. Industry standards would tell you if you are on a job for at least a minimum of 2 years, that's always a good place to have some stability there. And that's really what we're looking for from the loan officer standpoint is the stability of your job, but then also the stability of your income. So a lot of people have those questions because they might be an hourly paid employee, and if they work 40 hours a week or 80 hours every 2 weeks, and they do that every 2 weeks for 2 years, then it's all easy to deal with. But if you might work 34 hours one week and then 42 hours the
Fluctuates.
following week, and that income fluctuates, and the hours that you work fluctuate,
Sure.
it might be harder. Rule of thumb would say 2 years, but it's not required. We get this question a lot with people. We're a big education-based affiliate as well at the credit union, and so people coming out of college or coming out of high school and getting jobs.
Mhm.
If you get a job right out of college and you have an offer letter and you're a salary-based employee, typically we can use that information and use it as your income
Mhm.
because it's defined. It's going to be
Sure.
stable. And so again, there's not necessarily a defined time frame, but the longer the better. The more stable the income, the more stable the hours, the easier it makes it.
Sure.
I've heard it's a good idea not to make any large purchases whilst looking for a home until closing. Is that true?
Yes.
Definitely. I'll let you take that one based on
Yes.
experience.
If you're
So,
looking for a house, don't go buy a car. Don't go buy a beach house. Don't go finance a motorcycle or a boat, because all of that affects your debt to income ratio. And, the banks check up until 2 days prior to closing to make sure you're still employed. You haven't pulled anything crazy on your credit score. So, no, if you're looking for a house, don't change a job and don't go buy anything crazy.
yeah, we used to have a thing that would go around in emails. It was the 10 commandments of getting a mortgage, and that was always one of the top ones. It was don't finance anything, don't have your credit checked because we are automatically notified
Sure.
up until closing of if anybody else has pulled your
Pulled your credit.
credit. And you may not have opened a new account, you may have just been looking, but things like furniture, appliances, people want to have those going into a new home. We always suggest, please wait, get your keys to your house from the
Right.
attorney at closing, and then go to your favorite department store.
Yeah,
to
make
buy
sure your
those
loan
things.
is funded, and then you can go.
Absolutely, absolutely. Have the keys in your hand before you do all that because it can affect your qualifying.
Yes.
People have decided to change jobs a week before they're trying to buy a house, and that presents a problem.
Hmm.
So anything that might affect your financial standing at that point, please hold off.
Absolutely.
Let's see here. Question on, so are there certain loans that are best for first-time home buyers, and what makes you a first-time home buyer?
I'll start with the second question first. What makes you considered a first-time home buyer is if you haven't owned title to a property in the last 3 years. So technically, if you even had a home and you sold it, or maybe you even left a property in a will at some point, if you haven't been on title to that property in the last 3 years, that can make you a first-time buyer. It's always not necessarily to follow the marketing tool of first-time buyer loans because a lot of times if you are overqualified or well qualified, you may not need the perks of a first-time
Sure.
buyer loan. You might have a substantial down payment. You might have, all of the boxes might check to where, again, that's the loan officer's job or the home loan consultant's job to kind of sort of see what your package presents and then
Sure.
give you those options. A lot of times first-time buyer marketing is kind of sort of steered to that to get you a best deal, but it's not always the best scenario for each individual buyer.
Right.
So
What goes into determining your interest rate?
multiple things. Again, it's a big picture question when it comes to it's credit score related, it is loan amount related, it
Down
is your down payment. If you have a higher down payment, then you may end up getting a slightly better interest rate. The better the credit score, the better the interest rate is. So that's why we always say it's not just credit score related
And your terms too.
and your terms. Absolutely. The shorter the term, if you have a 10-year or 15-year loan, you're going to get a little bit better interest rate than a 30-year loan,
Sure.
but you're also going to have a higher payment. Guys, I think we are coming down to the close of the session. We're right up against the time frame. So again, I do want to say thank you so much to Amy for being here with
No
us
problem.
to answer all the.
Thank you for having me.
Love to have you here. Thank you for answering all the real estate related questions, stuff that I don't know anything about. But again, I just want to thank everybody for attending the session. Please know that, again, the text line will be up and open for you to continue submitting questions if you have it. If we didn't get to your questions that you submitted, we will be reaching back out to you over the next several days and hopefully answering all of those questions that we can. If you have personal related questions, please feel free to reach out to us as well, and we'll set up a phone call or an email or maybe even a chat session as well that we can help answer some of those further questions. But again, thank you again for joining us here today. We appreciate all your time, and thank you for visiting us at Georgia United.